and today we'll be discussing how to keep up with deal flow in apartment syndication, and what does that even mean. And some things I'll highlight are where to source on-market deals, also off-market, and how and what the difference is, the process of that, how to keep track of active deals or your active pipeline, as it could be chaotic. Maybe you have 15, 20 deals at the same time. And I guess that leads into the next question is, how do you prioritize those deals? I mean, on top of that, I'll throw in hopefully some nuggets for you to take home and maybe use for yourself. That's the goal of this whole webinar, right? Is for you to be able to apply these things to your own operation or your own needs, whether it's single family, multifamily, whatever it may be. Industrial, it doesn't have to be specifically multifamily, but again, that's the team that I work on, and this is the Multifamily Investor Nation, so it's going to be directed more specifically to the multifamily world. Okay, so what is deal flow? I think it's important to highlight what even that is. It's basically you're sourcing deals to and underwriting those deals. So it's your active pipeline that you're underwriting. And what is underwriting? That's obviously just valuing and modeling the financials of each specific property and seeing what those returns look like. So where do you source on-market deals, and what even is an on-market deal? An on-market deal means that it's fully marketed, in the sense that brokerage firms will blast out to the public and all over their website, and they will basically try to get as many people's eyes on this property for sale. And typically in the commercial real estate, there's only a seller's broker that represents the seller. So you don't have someone to go out there and look for deal flow yourself. That's why there's an acquisitions team in big operations such as PassiveInvesting.com. We basically act as the brokers for our specific team. And how do we keep up with all of these on-market deals? Or actually, first off, we can look at where we source these deals and how do we have a constant stream of deal flow coming in. Basically, over time, as brokerage firms blast out these deals that come to market, they have these email chains, or let's call them, when you get those really annoying emails from random things and it's constant, I guess they're called email chains. They send out these constant reminders and also new alerts that deals come online once you sign up to their email chain. And in order to do that, I can just show an example. I hope everyone can see this. Maybe just say yes if you see my search, but I'm just going to go to a big brokerage firm that just came to mind, such as Newmark. Right? Newmark does a lot of business in the brokerage world for commercial real estate, especially multifamily. So you just go to their homepage. Newmark is obviously nationwide. You can just go to investment sales or multifamily. It's typically investment sales. And this is all for basically every major brokerage firm, right? So JLL, Cushman & Wakefield, all of these. You can go in and they'll just have a list, a plethora of deals that are on market. And you can go to asset class. Again, they have all different types. You could search any place. Florida is a market that we look at. I mean, you could do, they have it broken down so specifically. You can look at a map view and, all right, let's click this first one here. Let's just pretend that we're looking to start up our deal flow. So what you do is you click into a property. You say, okay, you're interested in this property. And what do I do now? They'll have all this marketing materials on this specific property, this specific location. And what there's this thing called a CA, or Confidentiality Agreement. And in order to get access to this specific property's financials, you need to say, okay, I'm not going to share these financials with anyone else. Confidentiality agreement, right? So you go ahead and you actually will click that, and it'll say, okay, what's your first, last name, email, what's your role in the industry, who are you? And many times you can create an account and you can sign up for these large email blasts once you create that account. And then you can create, let's call it a separate inbox. And you can have a deal flow inbox of all of these different brokerage firms. Let me get back to that main page. You have all these different brokerage firm signups, and you can just have one. And how we do is we have one specific inbox or email, and it just, all of those new deals go to that specific inbox, and we can just filter through it And we could say, okay, delete, we don't want that one. And then they'll also update you, say, okay, the call for offers, the first time the initial offers are due, they'll blast out the date that it's due. So that's a really, really crucial way in order for you to keep up with deal flow, is first create the deal flow in an email box for on-marketed deals. And then that process works very different for off-market deals, right? You need to, in order to source off-market deals, it's quite challenging in the sense that if you don't have a shop or an operation that's well known in the industry, you're really not going to have too many brokerage firms calling you up and saying, hey, Chris, we have this, I know you have no deals or whatever, but we have this 300 unit complex for sale and we're only giving it to 7 people. Those types of scenarios are very different. Again, as we have a great reputation, we get a lot of those off-market deals, and they're handled very different. The deal flow of an off-market deal versus an on-market deal is very different, in the sense that an on-market deal, you might have 30 to 45 days of marketing time to tour that asset, to underwrite that asset, to go through your checklists. Whereas an off-market, you need to give that broker a response. They're giving you the benefit of the doubt to see this property, where, let's call it 95% of the industry has no idea it's even for sale. And you need to give them an answer and feedback within 24, 48 hours. We try to be in that 24-hour mark. So that kind of goes into the sense of how do you prioritize deals? It's, well, if you have an active pipeline of 30 on-marketed deals and you get 2 off-market deals that come into your inbox, or they call you up and say, hey, Chris, this deal, we need an answer. You obviously drop whatever you're doing and you underwrite that deal to the best of your capability without seeing that deal, without doing anything, and you tried to give them an answer. So I don't think there's a one size fits all when it comes to deal flow, but when you get to a larger scale, we can have anywhere from 35, 40, maybe even 55 deals in the pipeline. And again, that fluctuates. So during Christmas time and during New Year's, actually kind of a lot of tax reasons, actually, there's a lot of stuff that's not online, and therefore you can kind of regroup and reorganize, and work on your process. But in the middle of May, April, June, whatever it may be, or early spring to middle summer, this market is hot. And believe it or not, with interest rates fluctuating as much as they are, or rising for that matter, we're not seeing a decline in deals coming on market. So we need to constantly be working on our operation or our system process of deal flow. And basically, I can go through our process of deal flow for when a deal does come into the inbox, to underwriting it, to actually closing on that deal. So just very high level, what that looks like is a deal comes into the inbox. This is an on-marketed deal. We'll have an analyst underwrite that deal. So they'll download the documents, they'll sign that CA, and basically they'll scrub that data, they'll put it into our model, and we'll get a first pass. And usually we have 3 levels. The first pass is just saying, okay, where do we think the numbers are going to come in? Because you never get a price up front on these larger deals. So we'll underwrite that. We'll get a general sense of where the price point will be. And we'll say, okay, the numbers look good, right? So next step, someone will go in there and do a rent analysis. And this process isn't typically in one day. Again, you have about 30 to 45 days when a deal first hits the market. So you go in, you'll do a rent analysis. The deal looks great. You go and tour that asset eventually, and then you tweak your capital expenditure costs based on that in-person tour. And then the call for offers date will come up, and you submit that first offer. And then usually there's multiple rounds of offers. Again, if it's on market, there's usually at least 2 rounds of offers. And during that time, just to give you a sense of how busy it can get. During that one specific deal, you can have 30 other deals going on at the same time. So having a process that's systematic and everyone knows their roles is crucial. Even if you're a one-man team, you need to maybe even have a software or an Excel sheet to say, okay, I'm 30% done with this deal. And you need to have levels or an idea of where you are and keep a good track of where each deal is as you underwrite them. If you're running a smaller operation, say you're a one-man team and you're just trying to get your first duplex, triplex, whatever it may be, and you have 3 or 4 of them, it's a little bit different of a story, and you have to basically source a little bit different. I think these larger larger brokerage firms still host and blast out these smaller deals. Maybe they're just not Newmark. Maybe it might be something else. I don't know. A Marcus Millichap or something of that nature. But they typically all blast them out. Okay, I'm getting a little bit sidetracked on some of these. Sorry for the tangents, but please go ahead and put in any questions you may have based on anything that I've spoken about or anything you'd like me to cover further. But so we've sourced an on-market deal, we sourced an off-market deal. We're keeping track of our active deals by creating steps of our underwriting and knowing where we are. And someone wrote, "Can I see your slides?" I don't have any slides. I'm just speaking on experience I'm actually looking at this page right here. What steps do you take in second pass rent analysis? Yeah, that's a great question. So once a deal is underwritten very high level, we're just getting an idea of what that actual cap rate is, where that price might land, where at a very high level we think we can push rents and what capital expenditure will look like just based on pictures or an offering memorandum that isn't or called an OM, which a lot of these brokerage firms will supply. It's basically a marketing package, and they'll give they'll give way too much information. But that second pass for our team looks like this. So we have the deal, we have our model, has all the numbers in it. We will go ahead and call the broker. Many times when you sign, let me look at this. Many times when you look at a page of a deal, you'll have the brokers at the end, right? So you'll have a list of brokers down here. Usually the first one's the head guy. We can go up. And when you get to larger deals like this, many times, I had to hide this thing up here. Where's my sheet? There it is. Many times it's the same broker. So I have great relationships with all these top brokers or the guys that's usually listed first, and I'll just call them up. I can even shoot them a text and say, hey, what's the price on this? But that's the next step, is finding out where they expect this deal to land on a price standpoint. It's called a guidance, whisper price. I mean, there's so many different names for just the price of a property. I find that so funny, but I'll call them up. I'll get the actual price. I'll get the date when it's due, and that second pass will look like this. You'll have a software. We use CoStar, where you can use Yardi, you can use apartments.com. I mean, apartments.com is free, and it's probably the best service that's free out there, where you can go ahead, look on a map and say, okay, the street half a mile down the way is a perfect comp for the deal at hand. A comp is just a like-kind property that we feel as if we can trail rents off of or basically compete against in that market. We can say, okay, they are $200 more than we are, but we're a newer property. So we feel as if we can push rents up to that $200. And basically that's a rent analysis. We're going to get multiple like-kind properties or comps, and we're going to underwrite and come up with pro forma rents or future rents that we feel are achievable in X amount of time. That's what phase 2 or step 2 looks like, as well as confirming a lot of the expenses. Going on the county website and confirming your taxes. Taxes is always the biggest, the largest expense, especially in these larger properties. You can have a tax expense of $1.5 million. And being off 20% is crucial, is huge. It can make or break a deal. So Step two in the underwriting process for us is just figuring out all those expenses and figuring out our pro forma to basically cross our T's, dot our I's, as you may say. All right, I'm going to answer another question. I hope that made some sense. Again, I'm getting way off topic off of keeping up with deal flow, but that's fine. I don't really mind where this conversation goes. It's really more of a benefit for you guys, so keep up with the questions. What softwares do you use to underwrite the initial numbers for first pass? Our model is hosted in Excel. It has been built up tremendously over the 2 years that I've been with PassiveInvesting.com. It's ever changing. I think that's crucial in a successful industry. You need to change things that work for the better. You find things that are less efficient, and that's ever changing. I'm not changing formulas, so to say, but rather just the efficiency of that model. But another software we use is called RedIQ. That is, it's a little bit more institutional in the sense that, as the properties get larger, the numbers get more clean. You don't really have any mom and pop owners. So RedIQ is a software that basically reads institutional quality numbers, and it populates our model instantaneously for both your trailing numbers and your rent roll. Is there a software for underwriting? I don't really know. I mean, you can use Google Sheets, you can use Excel. Excel is probably the software that I like to highlight the most. It's the most used in the industry. It's the easiest to use. I don't think there's anything out there where you find a property and you have a model and you click a button and it just populates the whole thing. So if that's what you mean, no. If that was the case, life would be easy. That's why there's a whole team of acquisitions and yeah. So good question, but maybe one day. Let's see in the chat box. What software do you use to manage deal flow? Yeah, good question. Initially, we used, or deal flow, pipeline, whatever you want to call it. Initially, we used a software that was actually very inexpensive called Monday.com. I can type that in the box here, but it's spelled like the day of the week. It's $20 a month or something very inexpensive. And it's basically just, it could be used as a CRM board, but it's a great way to keep organized. And I know operations that don't have anything other than Excel to track their pipeline or their deal flow. But I think it's crucial to have, thank you, let's see, it's in the chat box there. I think it's crucial to keep track in a very organized manner your pipeline. That is basically, one can argue, I'm biased, I'm on the acquisitions team, but that's your bloodline of an operation, or like it's think of it this way. It's easier to raise capital in today's world than to find a deal that makes a lot of sense. You can raise all the capital in the world, but if you don't have a deal, there's nothing you can do. If you find a great deal, you're going to find capital for that deal. So I think keeping an organized, just an organized system of your bloodline or your pipeline is crucial. So we've transitioned from Monday.com. We've tried others. Actually, initially Airtable, which is another one. I'll type that in. Airtable.com. That is where we initially started. We outgrew that. There was just not enough function for the real estate world. We moved to Monday.com. That didn't have all the functions we desired. And now we actually work on something called DealPath. DealPath is a very expensive software. I don't think that anyone that has that doesn't have a large operation really makes sense for you. And you can get away with using Monday.com. It's probably easier to understand anyway. So that's how we transitioned, and then that's the software we use. But I know people, again, that use Excel for it. It's just a matter of how much of a convenience you want to have. Okay, answered that. How do you underwrite unpriced deal? Yeah, that's a good question. So a lot of the times you'll get a deal in the inbox and there's no price on it. There's no price tag. and over time you understand where the market is, where the cap rates are set, and what the expectations are from both the seller and broker standpoint. But when you're underwriting a deal and you don't have a price on it, there's a couple things you can do. You can go in a software or even public information. You can check out what comps have sold for. You can say, okay, the ABC multifamily complex 2 miles down the street sold for 200 a unit, and that was much older than this property. So we can almost guarantee this seller, this property is going to want more than 200 a door, and you can just start there and you can adjust. But yeah, that's a good question. That's ever changing. But when you underwrite 600 deals a year or even more than that, you get a really good sense. Our guess or estimated guess is quite accurate. It's basically, instead of 200 a door, maybe they're at 210. We're very small margins on guessing, but I think over time you understand where the caps are, and that falls into your next thing is where are caps. I think it depends on the class property. So there's A, B, C class properties. I think there's F or D, but don't ever invest in one of those. Cap rates change, whether it's multifamily, self-storage, whatever it may be. So just figuring out where caps are today, and that's easy to figure out once you underwrite the deal or two. Answer that live. Okay. I want to touch upon this last note here, how to prioritize deals, because this is probably, other than just being on market, off market, I think this is one of the harder things of a acquisitions team standpoint, is figuring out why is this property better than this one, and why should I focus more on this deal in this specific moment when they're both due today. And this happens a lot in my position, in my role, and I think in operations as such, is there's endless amounts of deals in the market. And again, at this point, we're just assuming that we have a set criteria. The last one is called deal path. Excuse me, I'll type that in. I see someone's question. So I lost my train of thought. So that's probably the most challenging part of the job, is we're going to make very quick decisions on which deal do I prioritize and why. And I think over time you get a sense of what to prioritize. I was saying there's an endless amount of deals, and we're assuming that we have a criteria or a target market that we're aiming for. Let's just make up a random thing. Houston for this example has many deals that come online. Houston's huge. There's a lot of multifamily complexes in Houston. And why am I going to target? For instance, there's two deals. They're a mile down the street. Why do I go after one over the other? How do I determine that? And I think there's no correct answer to that, but rather what's best for you and the company, and what makes the most sense and for our investors as an acquisition standpoint. And making those, let's not call them split second decisions, but making those decisions is going to be crucial into your success. So let's just use that Houston example. So say they're built in the same year, they have the same vintage, they have the same price, different brokerage firms. Let's call it even the same returns. What's going to be the decision factor? One, we're going to look at the very specific submarket of each individual property. What's literally around that property, and why, as a renter, would I pick this property over the other one? That's how I think when I just choose to prioritize. If it's literally the same exact property just a mile down the road, you need to think as a renter, and why would I go to this property, and why would I want to invest or purchase and operate this property over the other? That's really challenging, but basically you can use market data. You can say, okay, this little submarket, this little area is it's better. It's somewhere I'd rather want to raise a family than this area right here, because maybe two streets down the road on this side is just not good. So finding out how to prioritize situations like that and micro focusing on deals is crucial in the success to keeping up with a solid and accurate or efficient deal flow, let's call it. Another example, making these off the top of my head, so excuse me, but whether, say that you have 2 off-market deals in completely separate markets with the same deadline, you can do a quick analysis. Like I said, usually when it's off-market, you get the price right away. You can do a quick step 1 or level 1 underwriting and know immediately, like absolutely immediately, just off the cap rate, which deal makes more sense. And then you're not going to entirely base it off that. I think a big part of it is going into the submarket demographics and just analytics. And you can get that off of softwares. I don't want to keep quoting CoStar, but there are, I don't know, a plethora of data that is out there that's for free. So again, it's ever changing how to figure out which deals to prioritize, but you need to set that up before you get into that situation and be like, oh shoot, what do I have to do? Which deals do I work on? All right, I'm going to answer a couple more questions. Is money.com can be used for multifamily underwriting? Yes, you can. I mean, it's a CRM board that you can use for literally anything, whether that's sales, whatever, but we used it for multifamily operations. Yes, or multifamily pipeline or deal flow for that matter. Where do you check sales comps for apartment buildings? Any software or website like Zillow? Zillow is for single family rentals. Yes, they do have sales if you're looking at the single family, but you can look at, I think it's just as simple as a Google search. You can look up, I obviously have I'm fortunate enough where I have softwares through this company where I can use CoStar.com, which will show the recent sale comps and things like that, but it's public data. You can go out there, you could just do a couple searches and just find some stuff that makes sense. I hope that was answered okay. All right, I'm getting some stuff here in the chat. Let me cover this and I'll answer a couple more questions and then I will end up here. I hope I am covering the stuff that was anticipated as well as some extra stuff for you guys. Other than CoStar, which other tools online do you use for demographic information? Well, you have the census. You have, I guess it's usually delayed a year, obviously. So you have the 2020 or 2021 census, which you can find for population growth, for whether household incomes, things of that nature. There's actually brokerage firms will do some market reports. For instance, one off the top of my head is Arcadia. So Arcadia market reports, you can go in and they'll have some great reports here. Let's see if I can find something. Forecasted national trends. I mean, they have all this stuff. You just sign in. Oh, by the way, there's a subscription. That's what I was talking about earlier. Maybe annoying for some stuff, but it is truly really, really good information. They have market specific data, forecast, things of that nature. So it's as simple as a quick, I just typed in one brokerage firm and market data, market reports, and it popped right up. So hope that makes sense. There's a statement about CoStar and the sales volume dipping down. It's largest ever recorded. Are you seeing any break in buyers' willingness to pay current prices and hence some sellers softening prices? That's a great question, Richard. I think that there is a little bit of a delay, or there will be a delay period in seller mindset. All sellers are aware of what's happening in the market in regards to interest rates and how that may soften prices. But as of right now, yes, it depends on the market, I think. So Florida has, for instance, I'll try not to get too specific here. Florida has basically over the past 2 years skyrocketed to a point where the cap rates are so compressed that we're seeing more of a pullback in price and realization that interest rates are rising. But when you go to a market like Charleston, South Carolina, where I'm located, we're seeing a lot less of a pullback, and buyers are still buying at these tight cap rates and still making deals work. They're going to be buyers just as a whole are going to be creative enough where debt is not going to be the end all be all. I hope that makes sense. It's very contingent on the market and also the class, the category. I think CoStar is, when it's talking about multifamily sales nationwide, that's a little bit general in the sense that that's all classes. When it comes to Class A properties, the stuff that I'm dealing with every single day, we still have a pipeline of 40, 50 deals that's on market that we're actually interested in. So that 44% might be as a whole, but not in the environment that I'm working in. I hope that makes sense. Okay, that was a lot of information. I'm sorry if that was over some people's heads or if it was not too in-depth. I don't really know, but I want to end it there. Going to thank everyone for being here. And again, definitely check out that Multifamily Investor Con this coming June in Charlotte, North Carolina. It's going to be a great event. You have Shaquille O'Neal. He owns, just for a little sneak peek, he owns 155 car washes. Who knew? So really, really interesting stuff that you really won't get on national television that he speaks on. Okay, ending it there. Thanks again, everyone, for joining, and I will see you next time.